One of the last times that a major crypto CEO was featured on the front of Forbes was Sam Bankman-Fried, and everyone knows how that turned out for the crypto market, with altcoins dropping from $1.26 trillion all the way down to $400 billion, losing over 60% of their value in a little over 2 months. And like clockwork, the next person we're seeing featured on Forbes is none other than MicroStrategy CEO Michael Saylor. So, not gonna lie, I found this pretty interesting because everyone says that this time it's different and this market cycle is gonna be completely different. And in my video yesterday, we played this clip from Kevin O'Leary, and here's what he said.
Michael Saylor is talking his book, all right? The guy sells stock and pref shares and debt and then buys Bitcoin with it. The stock trades at twice the value of the inherent Bitcoin. That smells like something that ain't gonna work long term. Just saying. I like the guy, but it has nothing to do with strategic reserve of Bitcoin, which will never happen because we'll never get buy off on a bipartisan basis.
Now, I thought this was a pretty interesting post. Let me know your guys' thoughts here, because MicroStrategy's reflexive Ponzi loop, this post made here by Jacob King on Twitter, is saying that number one, MicroStrategy issues debt or equity to buy Bitcoin. They then buy Bitcoin, pushing Bitcoin's price higher. Then MicroStrategy's market cap increases, and then they attract retail investors, which causes MicroStrategy to issue more equity to buy even more Bitcoin. And then this reflexive loop repeats until it breaks. Now, at the bottom of this, you can see some fun facts about Michael Saylor. He was ranked the #1 loser in the entire world during the dot-com bubble. He faced massive accounting fraud scandals in the 2000s. His stock price plunged 99.99%. And then he was involved in several tax fraud scandals from 1989 to 2023. And then he owes $25 million to the DOC. Now, Michael Saylor has been asked this question before, one of which being on CNBC. Here's what he said.
So what do you say to people who say, well, it's a Ponzi scheme because every time Bitcoin goes up, you issue more equity and debt to buy more Bitcoin. It just keeps going and going and going.
Yeah, just like developers in Manhattan, every time Manhattan real estate goes up in value, they issue more debt to develop more real estate. That's why your buildings are so tall in New York City. It's been going on for 350 years. I would call it an economy.
So fair response, he's definitely right here. Everything's a pyramid scheme. He's just not denying it. So at what point does Saylor's Bitcoin Ponzi scheme fail? Well, many people are saying this is going to be the biggest collapse ever since FTX, because in 2020, MicroStrategy flipped from a boring software firm to a full-blown Bitcoin vault, and today they hold over 500,000 Bitcoin, almost $61 billion. And their playbook is really simple. You know, they raise money via shares or bonds to buy Bitcoin, they announce the buys, their stock pumps, and then they raise more money. So their strategy is a financial looping system here, betting on the price of Bitcoin increasing. But what happens when the price of Bitcoin decreases, like what's happening right now? Well, you can see the stock price is absolutely plunging. You know, back in July of 2025 it was 460. It's down 58%, and it continues to drop. And MicroStrategy has been pressing the gas harder than ever. So the $1 billion here in the share sale plan, it isn't just a one-time raise. It's an ATM program. They drip shares onto the open market at spot prices. Retail soaks up the dilution unknowingly. The MicroStrategy pockets the cash and stacks more sats over and over again. And it worked while Bitcoin kept rising, but there's a catch here. The average cost is $70,000 per coin. That's the soft floor here. So if Bitcoin dips too far below it, their $25 billion treasury starts bleeding fast. And that's where pressure mounts to sell. Now, I thought this was an interesting post from Chainmine here, because he's saying that Saylor says he'll never sell. But this isn't about philosophy here. It's about accounting risk and debt. If Bitcoin revisits the low $70,000, boardrooms, auditors, and lenders will care and slogans won't plug balance sheet holes. And in Q1 of this year, they disclosed $5.9 billion in unrealized Bitcoin losses, and that was under the new accounting standard, ASC 350/60. So it forces fair value reporting. There's no more hiding behind book value. Every dip now hits the income statement. And so what do you guys think about this? He's saying that they're not a Bitcoin ETF either. There's something in between, a publicly traded Bitcoin proxy with zero guardrails run on tweets and market vibes here. And meanwhile, ETF capital is flowing elsewhere. Since January 2024, BlackRock's IBIT has ballooned to 70 billion assets under management. It's more transparent, better regulated, and doesn't dilute investors. And they've trained an entire generation to cheer every single "we bought more" post. But these buys come at a cost. Shareholders get diluted, risk balloons, and conviction turns into a reflexive mania. So the key to understand here is MicroStrategy isn't a hero. They're also not the villain here. It's a risk vector built on leverage, narrative, and marketing philosophy here. So we need to look at the charts here to understand how oversold is Bitcoin, and could it go lower to the downside? If so, how much lower could it realistically go? Because Bitcoin is more oversold than any point in the last 3 years. And MicroStrategy is the most oversold that it's been since October of 2024. The stochastic RSI is at 0 and 0 on the weekly chart, and the relative strength index is down here at 29. Now, if we look at Bitcoin's price chart here on the weekly, we can see that right now this is a higher low than the past low on the 7th of April, but it's a lower low on the relative strength index. So this is actually a hidden bullish divergence. So it's not a complete curtain call here. However, we did get a weekly candle body close below the 50 EMA. So it's not the best sign in the world, because the last time that this happened here during the last bear market, well, we had a weekly candle body close back here in July, but it rallied right back above it aggressively. The time before then, or the time after then, was by January of 2022. And then we saw several weekly candle closes below the 50 EMA. And we saw one final retrace back above it. And then we went into a bear market from that stage. So based on what I'm seeing right here on the chart, we're in one of two locations for Bitcoin. And it really creates a 50-50 coin flip here, which I know is not what you want to hear, but you just have to take it for how it is, because point number one would be roughly right around here during this stage, and we have a rally back to the upside to either put in a lower high or higher high for Bitcoin, or we're roughly around this stage right here finding the low before we experience a retracement for a lower high. Then we go into the bear market. So in my opinion, both situations right here come with a retracement back to the upside, which I've been explaining in previous videos, and I'll explain my logic here in a little bit, but also both scenarios come with a grueling bear market. And MicroStrategy could be the company that causes the major sell-off to the bottom, like what FTX, Celsius, Voyager, Three Arrows Capital, etc. was last bear market, being forced to sell, causing one of the biggest bankruptcies in history. So we'll see if that happens. Again, I'm just sharing what other people are saying out there online. This is not financial advice. These videos are purely for education, speculation, and entertainment purposes only. So I'm going to share my thoughts and my logic here on what I see happening on the charts, and take it or leave it. I literally don't care, because you're a full-grown adult. You're very intelligent. You can make up your own mind here. So looking at the stochastic RSI and the relative strength index, we can see the stochastic RSI on the weekly chart is oversold. We're at 4 and 0. And I think we're bottoming out here, and eventually there'll be a reversal back to the upside. Now, depending on how low we go for Bitcoin, I would expect there to be a retracement rally back to the 50 EMA, and for a lot of people, retail investors specifically, to be entering back into the market here for Bitcoin. Now, we're going to revisit this chart on this retracement back to the 50 EMA, but it reminds me of what happened back here during scenario number 2, with how low we are below the 50 EMA right now on this weekly candle body close. The 50 EMA was at $100,000. I mean, we're 8% below it. And if we measure back here from the 3rd of January, I mean, we dipped all the way 26% below it. So Bitcoin could definitely go lower in the short term. 8% below the 50 EMA was right here to $41,000. And as you can see here, Bitcoin dipped all the way down to $33,000 to come back down to these levels right here before retracing back to the 50 EMA. So a scenario like this is definitely possible for Bitcoin while the stochastic RSI stays down here in oversold conditions. But the reason why I believe a retracement rally or a pump is coming into the end of the year is just based on how oversold we are. There's a 100% chance, and I'm usually never this confident on price action because you just don't know, right? But there is a 100% chance, and we can verify this over time, that the stochastic RSI will eventually come back up above 20. It's guaranteed. The real question is, what does that look like on the price chart, right? Because every single time that the stochastic RSI at the bottom of the screen has dipped down below 20, it has always 100% of the time without fail come back above 20. The question then becomes, okay, well, when and what does that look like on the price chart? That, in my opinion, does not matter as much as what we're seeing on the confluence across multiple different key indicators. And you don't need that many indicators. You only need a few here. So based on this aggressive sell-off on the past 1, 2, 3, 4 bearish candles in a row, depending on how this daily candle body closes, I would expect Bitcoin's bottom to come anywhere between $86,000 to $88,000, $89,000, $90,000. And then for us to experience a bounce back to the upside over the next, few weeks and even couple months leading into December, back to the 50 EMA. And then we'll adjust our strategy and we'll figure out what's happening based on where the stochastic RSI is at that time. Now, I don't want to be the guy to come on here and flip-flop every single week. My thesis has remained generally the same here over the past few months, that when this sell-off is done, Bitcoin experiences a rally. And regardless of whether it's a lower high or a higher high, depending on how aggressive it is, I do think we go into a bear market in 2026.